life, your term show.
Okay, so I'm live here with Jacob Scanlan from Hashpower Academy on YouTube. And Keith from our office, Jacob, actually stumbled across your channel and quickly introduced me to it. And it's completely unique in the Bitcoin space in that it comes from like a mining and energy first perspective, which is, I would say, a more niche area of Bitcoin that it takes longer to get down the rabbit hole to start learning about, because at the beginning, it's all about making more fiat. And then it's about learning the economics and economic history, sound money, all that stuff, right? And you keep going down the rabbit hole, eventually getting to wanting to learn more about how mining and the energy impact of Bitcoin works. And that's where I think you come in and why I really wanted to chat with you, because you have a really interesting perspective on that stuff. So maybe before we dive into that, Jacob, you have a beautiful tropical background behind you. Why don't you let us know where you're at and where you're from?
Hello there. Hi, Anthony. I am in El Salvador, which is considered Bitcoin country, as it adopted Bitcoin as legal tender. I believe that has been drawn back a little bit due to probably IMF considerations and other things. But the premise is, is to explore, for me personally being here, is to explore not just the mining side. It's really important, and it's a very niche subject area, but also seeing the payments side of things. This sort of like duopoly of the energy side of Bitcoin is a big subject area. It's massive, and the Academy does focus on that. And then you've also got the finance side and actually sort of seeing the real world use cases of buying what is called a pupusa and stuff like that, like the local food in Bitcoin. Now, the bit that we go from today with people investing in all manner of different things to a Bitcoin future is there's a lot of subject areas in it. But yeah, if there's any particular pieces that you want to dive into, let me know.
Well, maybe you could just let us know a bit more about your background and where you're from and how you got into Bitcoin and ended up where you are in life right now. That would be really interesting to me.
So I was studying aerospace engineering at university. And during that time, you're halfway through. A lot of people take a trip. A lot of people take a year to go into industry and work or something like that. So we're all applying, everyone the same sort of age. We're all applying to the same sort of companies. And it's not to say I was noticing the salaries, but when you're learning aerospace engineering and learning about how to keep a plane flying, and it's a very interesting technical subject area, which very much helped with my framing of Bitcoin, different systems and risk analysis. But looking at the salaries was not too different to other sort of non-university level education that goes into work. And so it was always this thing of wanting more for myself. And that aspect of wanting more for myself transitioned into delving into Bitcoin, looking at trading, all other ways to generate incomes beyond not just working, but investing, essentially. And I started building algorithmic trading system, the bots that are looking at the markets and taking all different indicators. So there was a journey even from studying engineering to learning about trading systems and the financial architecture of the world. And Bitcoin gets involved in there because it's nuanced, it was new, but it took me, like it takes everyone else typically, which is a very financial lens of how they see Bitcoin. Looking at Bitcoin from its dollar price or pounds or euros or Canadian, and that's important. It's the key metric that people see. But where the journey gets to mining is, I was trading on these exchanges, and coming from engineering, I had 3 different systems and connections to the same exchange. That was my laptop on Wi-Fi, my phone on cellular to the mobile application, and I had bots and stuff deployed in the data center. 3 connections to the same exchange, and all 3 of them disconnected. And the exchange had the audacity to tell me that I had networking connection issues. So those sorts of things made me step back and go, hang on, that wasn't fair at all. It was completely on the exchange. But it pivoted me towards the mining side for some reason. This issue, and we're seeing this again today in this cycle, because what I was referring to was 4 years ago, that the issue of today is everyone's getting some Bitcoin. It's this like energy potential in their wallet, growing and appreciating in value. And they're like, I've got this Bitcoin now. What do I do with it? I want to generate yield, and that word. And that screwed over a lot of people in the last cycle of people getting into things that generate yield and cash flow. And the thing I can very much say is there is only one true intrinsic source of Bitcoin yield, and that's from mining. The finding of electrical energy that is in excess, cheap and abundant, and turning it into digital money. And so, yeah, that sort of took me from a journey of learning myself all the different financial bits going into the mining side. And where that developed, say, to the Hashpower Academy, is that I developed a business from the mining side of fractional shares into the machines, and trying to explain to people the value of mining, the importance and the profitability side. But coming from a technical background, I'd rather talk to you about 2 hours of how it works instead of the simplicity of, yeah, with mining you can generate 5% a month and it compounds very well, and you get the tax advantages and all these sorts of things that we can discuss as well. So some people just want the numbers, the numbers of the investment return. Others want all of the detail and all the opportunity to generate a return. And so coming from a technical side, trying to speak to people in a technical way, one of the latest learning curves of the last few years, especially with the academy, is I went back to the drawing board of the question of where do you start with your education with Bitcoin? Where do you begin? And with the course on the Hashpower Academy that's free, I took a journey of teaching Bitcoin not from the financial lens, which everyone else does. There's 100 other people that can talk hours and hours of Bitcoin in the context of finance. And the bit that I didn't see, or you could see from the mining side, because you also see this with the sort of differences in the types of conferences. You go to a mining-related conference, and it's all energy efficiency. You go to a finance conference about Bitcoin or crypto and the wider asset space, you've got everything talk about Bitcoin and finance. You speak to them about energy, they're lost. But the subject areas of Bitcoin, you've got this energy use and computers in the physical world and this blockchain, Bitcoin, digital world. So there's this magical piece in the middle that people don't really understand, which is hash power, the commodity that connects the electricity to the Bitcoin. And the journey that I took was, creating a course that taught Bitcoin from watts of power all the way to satoshis of money. But it's the bridge. How does it all connect? And that's the Hashpower side. So the Hashpower Academy birthed from creating a really interesting Bitcoin banking system is the long-term rabbit hole of the business side, but trying to explain it in a clear and concise way took me on a path in focusing on education. So that's a sort of rundown of wanting more for myself financially, seeing the salaries and the struggle of seeing a £30,000 salary versus seeing $120,000 in the US. They have more expenses, yes, but that difference in your value into different places that you go. And then finishing university, I went straight into an aerospace company, Airbus, and was doing risk management. So interestingly, all that bit I discussed of this energy side and finance side, the job role that I had in industry was to be a risk manager between all of the technical teams, sending up everything that can go wrong with a plane, all the technical stuff that I love, but also going and sitting in meetings with the heads of all different programs, design, engineering, just at the same time that the competitor, Boeing, had an issue. So risk management was very critical. But at that same time, Bitcoin was getting quite exciting. So I was sort of like bridged between being interested in aerospace, but also seeing that such industries, these large corporations, but especially aerospace, is very ossified. It's very common in aerospace to see someone that's been there 20, 30 years. So when you're young and you've got fresh ideas, I've got this idea to improve this and that. No, just no. It's like talking to your grandmother. Just nope. And so there's sort of, there's a lot of people, say, in that sort of Gen Z to millennial age group, which we were the kids of the acceleration of the internet into Web 2, and everything we can discuss is essentially Web 3. It's Web 1 was you open a website and you can read things. Web 2 is all the social media. You're writing, you're creating, you're posting, you're recording. And that Web 3 is taking everything of read and write and putting it into an ownership layer of actually owning something digitally online that cannot be replicated. And that brings us back to Bitcoin. But yeah. Is that
Yeah, it's a great intro and summary. So you mentioned a few things I'd like to ask you about. So one, you mentioned Bitcoin yield, and that mining is the only way to actually generate Bitcoin yield. Can you dive into that?
Yes, intrinsically. So many people will be familiar to Michael Saylor, who is the CEO of Strategy, former that, MicroStrategy. And you'll notice that he's launched Strive, Stretch, and all these other different financial offerings, which is some aspect of investing in their company, which internally they're buying Bitcoin and earning incomes from arbitraging the price fluctuations of Bitcoin compared to their shares and all the debt financing side of things. All of that he's cycling into more Bitcoin per share. And his strategy, stack as much Bitcoin as you physically can, because he understands the forward value of this money. And in conjunction with that, creating all these on-ramps. He's created all these different offerings, different amounts of yield and asset value. And those sorts of offerings are him trying to pierce the veil of fixed income, which is a lot of money. There's a lot of money out there. You could even say is of that retirement level. The range of people that will ever learn about Bitcoin, there's going to be the majority that will, like a car, you get in the car, turn the key, and drive. You don't care about how the combustion engine works. You don't care about the electrical system or any of the other pieces. You just want functionality. And that combination of most people are never going to go into the depths of learning the technical side. Plus, they're of an older age. They just want to care about life and family and kids. So there are people creating products, markets, services that generate Bitcoin yield and cash flows. And you saw that in a immature way with Celsius and some of these other yield generating platforms and all these sorts of things. But the bit where I say it's not intrinsic is even what Saylor's doing. He's arbitraging the differences between the fiat markets essentially and these new Bitcoin markets that are going to be in development. And all of that arbitrage he cycles into income generating products. So yeah, he's going to pierce the veil by offering returns that are like a lot higher than the overnight rate and stuff like that. And what that does is drive the infinitely expanding dollar system getting repriced against 21 million units that are expanding with energy under them. And the intrinsic side for mining is that I mentioned before, it's got all these technical aspects as well. But the business side of what I'm offering is essentially the fractional shares into mining. So you get Bitcoin mining as a completely financial investment. Same with Bitcoin. You log into a platform and you can click purchase. Do you want to know about the exchanging of electricity into a computer, which adds Bitcoin blocks to the blockchain, and that massive subject area that the Academy teaches? Some may wish to learn it. If they do, learn it. It's important to learn because it's the future energy-based system. We've got this dollar system and we're in that transition phase. So we're going to see all manner of different products, markets, services, and ways to acquire Bitcoin. But it comes back to what is your yield source? And if with mining, it's directly from the network. I add more blocks to the chain, I'm securing the network, and you get paid in Bitcoin. And the difference there is, if you pay for a Bitcoin today, you're spending 110,000 US dollars versus the average miner that's spending $50,000 to $60,000 of electricity to make that same Bitcoin. Yes, he's got a computer in the middle that's depreciating as well. But this is where you delve into combining the yield generation of mining with all the tax benefits. In the US side of things, I'm not massively familiar on the Canadian side, but in the US, if you have an LLC right now, the tax incentives of Trump has essentially laid out the red carpet, because these computers for Bitcoin mining, $5,000 to $10,000 each, they are 100% tax write-off, 100% bonus depreciation year one. Would you like to send your money to the government for tax, or would you like to reinvest in building out the Bitcoin network and generating Bitcoin cash flow on top? And any of those gains, you could probably have a write-off with expenses. You can't do that with just buying Bitcoin, because you're buying into Bitcoin and you're getting taxed on the capital gains, versus mining, which is that sort of infrastructure side of the network. So the future I see really is, there's going to be, as I said, there's a lot of people that would love to get into mining, but they don't have the power, so they can't do it at home. They don't have the tech or the finance to get it at scale, to get the economics profitable. So I see this way of, well, how do we get this massive wealth of the world of an older age, with the majority of the money of the world, that are seeking yield and fixed income, who are going to want to invest also in things that help build the future? And I can pretty much say that mining is the accelerant to build the future in the context of Bitcoin on the energy side. It's not just about the finance aspect of the Bitcoin price. And yes, it's on the infrastructure and energy side is, well, if I plug in a machine that can make money or provide that energy locally, and you keep expanding that system, you've got that 21 million units priced against energy. But I'm sure we can delve into that on a different question, because it's quite a particular subject area that's really important to the future. But yeah, that the pension age, they don't. If they want to learn, they want to learn. But if they just want to park their money somewhere and generate returns, mining with the right risk adjustments and liquidity and all these sorts of things will allow a person to have all these different like financial options that don't exist yet, because this Bitcoin subject area is a 2 trillion and growing asset on the top 10 leaderboard. I think it's like 5 or 6 up there with massive companies that we all operate and integrate with every day. So how we transition from just this financial asset to all of the different products, markets, services to serve all different age groups. For example, I think it's just as important for young people to have that path to both learning it and interpreting what the future will be. So we don't fill our cups with all the different fiat side of things, that people of an older age hold the majority of the wealth of the world. And yes, we will see that rotate into younger hands, inheritance. And that change is going to be very interesting for Bitcoin, because if you know people that are in the sort of studying finance, it'd be quite interesting to see how much of those students are wanting to do projects related to Bitcoin, digital assets, blockchain. The majority of engineers, 90% of engineers don't end up in engineering. They go into finance and all these sorts of things, solving problems. And so when you take this dichotomy of the younger people, by a larger percentage, are wanting to put every last penny of their time and energy into Bitcoin, combined with that wealth of an older age. So the few things that will happen is, well, we'll start with the first stage, which is people wanting to park their money, so they want the least amount of headache, but that consistency. So when it comes to cash flow Bitcoin, there's risks across everything, but the risk with mining is you are buying into a computer that depreciates. On the Bitcoin side, there will be people that do it where they just have a stack of Bitcoin, a quantity of it, and as they need money, they will spend it. But if it has a dollarized price that is volatile, there's quite an emotional headache there. If you've got something that is price consistent with a yield or just selling it, that would be different to having something that is volatile. You have to start timing when you sell, or dollar cost averaging both in and out. And those sorts of things are going to be, again, it comes back to that sort of there's a few misalignments. Like some of the most important principles when you have Bitcoin is not your keys, not your coins, and self-custody. Same thing. Most people will not have Bitcoin on their persons. The same analogy of the gold bugs. There's people that kept gold in a vault, and there's people that dug it and buried it in the ground. And the extremes there is most people are not we're not expecting everyone to store their own Bitcoin on their persons. The most important thing is at least some of it is. Because the worst case scenario, you do hand it off to anyone, any investment. The second it leaves your own persons, there is a risk aspect of it being lost. On the generation side of making sure that we have this world that I'll boil it backwards. I'll work it backwards. There's a path to enable people of an older age to invest in Bitcoin in a way that it builds out the future whilst they also receive income. And I see that from the mining side by creating the most easiest, simple, clearest way to access that Bitcoin cash flow, but also something. I'm trying not to show my own project, but I realize it's worth communicating because that's the reason I'm doing it. Is we want to try and remove as much of the technical headache out of the investment experience. But also, Bitcoin is variable yield. So how we create fixed income products is something that I'm working on as well. And the importance of that is still that, yes, if someone locks in a certain rate of yield that they're earning with their Bitcoin, what that does is they miss the upside, but they're looking to hedge the downside. So yeah, we're so early in the innings of these companies developing all different solutions to serve different age groups. But it's suffice to say that I I think about it quite a lot. But yeah.
Hey everyone, before we dive back into the podcast, I've got a quick shout out about the Your Life, Your Terms report. This is Tom's weekly newsletter where he and Nick share real stories, experiences, and powerful insights to help you live life on your terms. Each week, Tom breaks down the economy, real estate, macro trends, and Bitcoin, and gives you actionable steps to make these insights work for you. No fluff, no vague predictions, just a clear path to thriving no matter what's going on in the world. Tens of thousands of Canadians are already getting the real information they need to level up their lives every week. I can honestly say it's the only newsletter that I've stayed subscribed to for years. It delivers real value that keeps me coming back for more. Join us and start getting the insights and tools to create the life you want, plus entertaining and inspiring stories from Tom and Nick along the way. Sign up for free at rockstarinnercircle.com/get-started and start living life on your terms. That's rockstarinnercircle.com/get-started. Your first step to living life on your terms.
Now, is this Bitcoin yield that you're talking about fiat denominated? Because you referenced how a miner will spend $60,000 on the equipment, the electricity to earn a Bitcoin worth, let's call it $110,000, and then that's the spread. But obviously that's fiat denominated. So how? But you're also talking about how it's the only intrinsic way to earn Bitcoin yield, which is you are earning direct Bitcoin. So how do you think about that?
The intrinsic aspect is that Saylor's not producing Bitcoin. He's buying it and he's using fiat denominated ways to acquire it. People that are much more in the Bitcoin space, we do see a future where the dollar system could not say it could collapse. We've got this shifting in power structures globally. We can work it big to small. You've got the BRICS nations trying to do some aspect of collective trade without the dollar. So you're seeing this separation. You're also seeing large companies such as Tether, which is a dollar stablecoin, USDT, $1. And that is expanding in places such as here in Latin America. So you're seeing this sort of global change in the power structure of countries not happy with the US, and the US also expanding in other areas. And people here, for example, don't want Bitcoin's important, but dollar helps them at least preserve versus the local currency and all these sorts of things. And from that, you've got this path to creating please go back to your question, then I'll get lost in the sauce sometimes.
Yeah, no, that was a good thread that you're pulling on. But the original question was, is the Bitcoin yield you're referencing by mining
Dollars,
denominated versus Bitcoin denominated?
When you mine, you earn a quantity of Bitcoin, and that's based on there's a 450 Bitcoin cake that we all earn from every day that we show up to the party to mine. And if more of us show up to the party, we're all going to get a smaller slice. So we get a smaller quantity. So the dollarized aspect is when you see, okay, I earn this quantity of Bitcoin and it has a dollar price. So if the price doubled, yeah, you're mining twice as much in dollar terms within a dollar electrical bill that you pay and a dollar pricing for the computers that you're buying as well. So the dollar is going to be very much involved in this future, and for the platform that I'm developing, the path to create both Bitcoin fixed income products and dollarized ones as well. So both is the TDLR from my side personally. But that's important because the most important thing for me personally is optionality. Everything from the start of Bitcoin, there was optionality. People chose to download the software and consume some energy to make some sats. You can choose which wallet to use. You can choose. Every aspect of Bitcoin is choice. No one was forced to do anything. It's all willing participants. And from that, I see that same model being very important in any form of financial offerings, to create optionality. Because as these are also emerging technology subject areas, choice is very important. And even on the platform, there'll be multiple ways to buy those same machines, the computers. So you can buy it on the platform as fractional shares, or you can buy the machines in bulk. But they are the same thing, but I always use the analogy, everyone wants a deal. They want to know they're getting the price that's fair. And this is the other problem with mining is people that offer mining solutions, services, hosting, machine prices, all of it across the industry. There are people out there that use their knowledge gap of knowing the right pricing and the lack of knowledge to make, to rip people off. So I want to create pricing, fair pricing on the platform that's a free market price. The free market decides the price of these machines. So if that's going to align to the hardware market, because that's the backing of the fractional shares, that creates a world where you've got choice to buy, fair pricing, and all these other things, because that's what's really plagued the mining industry is the bad actors. So yeah, optionality, transparency, clarity, and opportunity and options. Yeah, those are the sort of the ethos, not just of the platform, but also the wider Bitcoin space as well.
Okay, so what you're looking to develop is like if somebody wants to earn yield or fixed income, that they can invest in mining with you and you run the actual operation and they get paid out a yield from that.
Yep. The goal is it'll start probably monthly, even weekly, and take it down to daily. And the reason for that is also I'm always considering risk. It's like if there's any issue with any particular part of the system, would you rather have an issue with 30 days of payment distribution or 1 day of payment distribution? It's 30 times less risk, essentially. So I'm always considering all different pieces and parts of the process. But when it comes to the investor side, yeah, it's multiple options to purchase and trade, multiple options to move it around and manage, but also creating these portfolios. So the key three pieces of the platform are going to be dollars/electrical bills, the computers themselves, and the Bitcoin. And everything dollar is coming in, everything of the fractional shares of the computers is traded with dollars and Bitcoin, and then all the payout options. For example, when you mine Bitcoin, the default is you earn Bitcoin. And if you wanted to create some form of portfolio strategy, that you wanted to have a portfolio that's a mix, an income one, so you'd have loads of fractional shares as the largest piece of the pie chart, and maybe you want to keep 30% of the Bitcoin and sell 20% of it into dollars. That system and service kind of exists, or you could mine some Bitcoin and send it to an exchange and do it yourself. But what I see is that same aspect of people of an older age. They want it automated. They want to know it's safe. to the comfort levels and understanding they have as what safe means to them, but they want those returns that they're not having to, what shall I say? If you have friends that are traders, they're like this at dinner. They're like this at 4 a.m. They're like, I see the psychological side of how people integrate with these opportunities, offerings, and investments in Bitcoin. And I don't think it's healthy for people to have to be constantly checking the price, constantly checking their trades and investments. It's not healthy. Mm-hmm. It doesn't create a productive society if we have this entire planet of Bitcoiners now that are just checking the price and sitting on their hands waiting for this future world to come. And I think, the builders will be the most rewarded, but those that really see the nuances that particular investor groups need, want, and care about, and serving their particular needs, but integrating that into the Bitcoin larger story, which is we truly go towards a system where we have a money completely in alignment with energy. If there is natural wealth, the story of California, the natural wealth found in the ground, the gold dispersed out to the world, and the people flooded in. But now in this Bitcoin future, we've got all these different places in the world where energy is the inputs to society, which means that there'll be economic creation of Bitcoin. So wherever there's creation of energy abundance and things are cheaper, drive the cars cheaper, the fuel of your plane is cheaper, everything. You've got this money being created wherever there's excess energy available. And that system, I've got goosebumps actually, that system, getting to that point in the future is a long journey, and it's a stormy sea. People will get burnt, but trying to make sure not as much people are on the right lifeboats, so to speak, navigating towards that sort of future, I think is really important. We want to build and grow this system, but do so in a way that serves everyone in that journey.
Okay. Yeah. Yes. Can you teach me about that? The money being in alignment with the energy, in perfect alignment, and the energy abundance, and like why the fact you're getting goosebumps. Can you describe to me what you're talking about?
Of all the different people that you speak to in Bitcoin, again, you've got the ones obsessed with the finance side, the ones obsessed with the energy side and the mining, and it's those that understand the duopoly of both, which is Bitcoin is mathematically and physically connected to electricity. It's created from electricity and a computer in the middle. The mining is essentially the bridge. You've got the physical good in the physical world consuming the power, and it's not a pricing system. It creates a pricing system from just being connected through physics and maths. And what that does essentially means that Bitcoin is tokenized electricity. It's the representation that something was created, not from nothing, but from electricity that was wasted and in excess in the physical world. But what that does, and I use the best analogy, which is gold. When you mine gold, compare it to mining Bitcoin, you process $2,000 worth of rock. You spend $2,000 processing rock to make your $3,000, I don't know what the price is now, $3,000 ounce of gold, and that's your profit margin. Now, when it comes to Bitcoin, you're spending, say, $60,000 on electricity to make your $110,000 Bitcoin. But the difference there is it goes both ways. You've got two commodities on either side. You've got the electricity, which is valuable in of itself. Yes, you are consuming it to make Bitcoin, but it's uniquely allowed to go the other way, which is with gold mining, you are just processing rock to get the $3,000 ounce of gold. You can't sell the rock that has gold in it. It's a one-way process. You have to refine it and process it to get the gold. What's unique about this new digital gold of Bitcoin is you've got this commodity of electricity, which is valuable in of itself compared to rock, versus Bitcoin, the money side, the finance aspect. So what you get is a system that's not a one-way process of buy power to generate, buy in the energy market of electricity to sell in the financial market is Bitcoin. But what you can uniquely do is do it the other way around, which is, for example, we're using the $60,000 of electricity. Now, what would happen if the price dropped to 55? What do you think? What do you think should happen if the price dropped to 55? There's a question for you.
Well, would and the Bitcoin price remain the same? Then your profit margin would.
I was spending $60,000 on electricity, but the price now crashed down to 55. Why would I consume $60,000 to make 55? You can sell the electricity, and that's the unique part. And so there is the main place to look this up is in Texas. The electrical grid is called ERCOT, and they're interconnected with Mexico below them, and the electrical grids on either side. It's a real hub. And what happens is you've got all these mining machines doing that very process. They're buying power to earn Bitcoin. But if the price on the grid was to shoot up, why would you consume it to make a small amount of money when you can make an even greater amount of money by stabilizing the electrical grid, selling power into a market that wants power? And all these renewables, when there's lots of wind, middle of the day, lots of sun, really hot, everyone's got the AC going or something like that, that excess amount of too much electricity on the grid, and the price drops. Now for mining, that price is a profit margin. We earn a certain amount, and if the price goes lower, our margin gets wider. So we are incentivized to buy power when it gets cheap and sell it when it's too expensive. We are the opposite to the demand of the electrical grid. And what that does is it's like a stability. It's a dampener. And so on the energy.
Sorry to stop you. Can you say that one more time? You're incentivized
to stabilize the electrical grid, because you are the exact customer that's like the opposite to what the grid needs. If you're a hospital, you need power. You can't trade energy. What's unique about Bitcoin is it's that use of power, just like a hospital or a school or anything else. But there's no business. When I say there's no business in the middle, it's a comical thing because I'm developing a business in the middle. But it's selling. It's just turning energy directly into money. And the premise of your question originally is essentially Bitcoin is indistinguishable from energy. It's a form of money that's the paradigm is that it's a form of money that is the same as energy. It's the same thing. That's the world we're going into, where we have a form of money that is no different from energy itself. In the way that
because it can be, well, it was obviously made from energy, but because it can be converted back into energy by selling it.
That's its pricing system. That way of buying power to produce and sell Bitcoin, or the price on the grid is offering a higher rate. Sell the power and arbitrage buy more Bitcoin. What it means is, So you've got this system where the energy side of Bitcoin is stabilizing energy markets, and the finance side of Bitcoin is the asset that's that can say stabilizing financial markets, but bringing us back to a form of money that's hard. The gold standard is when we built all these amazing, beautiful buildings across Europe and classical music and all these sorts of things. When we had a form of money that was hard to produce, we created a world that everything was developed out of quality and longevity. But we're now in this fiat world where the money is worth less tomorrow. So why would I hold it? I'd go be a rapper and throw it around. And that we can see it in the culture as well as just in of the monetary design of itself. But yeah, back to the energy piece. It's when you've got this fixed supply of 21 million units, and they cost more. Each unit is going to just infinitely cost more and more to produce in electricity. And then we're just discussing that there's a pricing system between the Bitcoin and the electricity. What that does is create this asset that's just it's designed to go up. It's engineered money. And that's probably why there's so many engineers that are obsessed. They're obsessed with Bitcoin because it's money that's been engineered. And it's engineered in dollar terms to just go up, because they're going to create more. The dollar system, fiat money, has to expand. If it stops expanding by printing the units, well, it collapses. What Bitcoin does is it doesn't. You generate productivity, electricity, to create the units. It's the other way around to fiat, which is you create money to stimulate productivity in the economy. You want more productivity. And what you see is essentially, like, for example, the entire stock market just pretty much treads water with, 10% a year is the typical returns in the stock market. The expansion of the money supply is about 10% a year. The pricing of property in the UK just follows the M2 money supply.
Yeah, same here.
When you're holding a property and its value in its price in dollars is going up, or pounds or Canadian, you've got people believe they're getting wealthier, but they're only treading water with the money printer. And the only few things that are outperforming it are Bitcoin and the forefront, the leaders of the stock market. But they're trading at multiples of their earnings, and it just means that it's just massively overpriced. Versus Bitcoin, which is the average person is spending about $60,000 to make a Bitcoin. So the income side of the mining, even compared to, say, the stock market, is the network itself has a lower stock to flow. On the mining side, you've got that multiple of income. But yeah, there's lots of analogies to real estate and mining as well. It's like having a rental property that's one customer, the Bitcoin network, and it pays without damaging anything and causing issues with the property. But yeah.
To generate the yield. The energy thing, I'm still just trying to wrap my head around it. So you spend the electricity. If the electricity becomes more valuable to sell to the network, you stop mining, you sell it to the network because you can actually get more Bitcoin because the value to the network has gone up.
So it's a double side. Bitcoin is essentially a double arbitrage and a bridge through the mining. All this hash rate bit in the middle, remember, it's a bridge between the two systems. So these computers in the middle literally go, is this global electrical grid of the Bitcoin network going to pay me more? Or is the local grid, and you're connected through both. You're connected through wires on the electrical side and through the internet on the digital side. And so it just creates a new pricing system in electricity. And if we want to really jump into the future, how do we get to a point where things are priced in Bitcoin? And a merchant selling, say, pupusas here, the local food, there's no way for them to conceptually price something in Bitcoin yet. But we just discussed that if Bitcoin has a mathematics pricing, a fundamental intrinsic connection to electricity and energy, and we are in the 21st century where everyone depends on the internet and the electrical grid, everyone. And what that does is, well, imagine a world where energy, we price things not from the top down, from the bottom up. So if energy can now be priced in Bitcoin, or so shall I say electricity can be priced in Bitcoin, well, everything that uses electricity can be priced in Bitcoin in terms of its use. One day, I'm sure you'll be able to pull up to an electric car charging station, and it will say sats or Bitcoin per kilowatt hour. Why? Why would they stop mining themselves at the car charging site when there's no cars? If there's no cars using power, they might want to mine some Bitcoin. And if they're mining Bitcoin at 15 cents a kilowatt hour of Bitcoin, they'd only want to sell it to you at 15 cents or higher. So it creates a way of getting Bitcoin, I believe, will start that unit of account process through the energy sector. Because if we price the costs to produce everything in Bitcoin, free market prices in a quantity of Bitcoin can come from that. But it starts with the energy side.
Okay, so it starts from the energy side. Your example of the car charger was good. It puts it in real terms for me. So you said 15. Sorry, what was the example you used? 15?
Yeah, it's about, well, if you get a really efficient computer, it uses less power to produce more Bitcoin. And the best analogy for that is like miles per gallon. There's a certain amount of fuel you put in the car, a gallon. How much performance can you get out of it? So the computers of a higher performance will do like 25 and higher, 25 cents per kilowatt hour. So on the energy side, you're going, hang on, I've got this computer that can make, should we say, 20 cents a kilowatt. let me go find power lower than 10, lower than 5, because that's your margin. The network is determining what you're paid. I'll say that again. The Bitcoin network determines what you are paid. So your energy cost is your margin. And everything we discussed on the fixed income products is whatever that price is, in the future you'll be able to lock it. You'll be able to lock that rate, and then you've got that opportunity to just find power. And that just creates new ways to earn as well. Yeah.
Okay. I don't know if I still fully get it, but it sets a baseline because you have a global balancing system between the cost of power and the cost of power, and then the profitability of selling it to the local grid or the global grid. I'm getting like partway there, Jacob, but I don't think it's fully for me.
It's whichever one will pay you more.
Yes. Okay.
It's which one will pay you more. Because the computer is binary. It's not to say it's on or off. You can also, to people in the computer world, they'll be familiar with underclocking and overclocking, which is just increasing or decreasing the energy use of the power and manipulating things internally. And so you don't have to switch the computers off. You could just have it's almost like they breathe. They consume more power or less power.
Yes.
So the other side of that stability is that when the grid is more stable, which is happening in Texas, there's several cases they had a big storm, all the miners switched off, and so there was available power to the grid. A less volatile grid means cheaper power prices, because that big utility that sells you your residential power, they're buying it wholesale, and if the wholesales are volatile, they're just going to crank the price up to stomach any of the volatility that local residents on a fixed rate using power whenever, however. So they're managing all that volatility of use with overcharging people. And then you got all these renewables which destabilize the supply of power. So you got consumers of power destabilizing in terms of they want to turn the lights on and watch TV when they want to, and not have the utility say, hey, maybe this hour use some less power. That's not the world we want. That's adding friction. And then you've got renewables on the supply side that nature is now in control when we produce power. So what we need is something in the middle, the mining, that if there's too much power, mine it. If there's not enough power, sell it. And it just stabilizes both sides. So it actually helps reduce prices on electrical grids. And this also happens in Africa as well. There's a company called Gridless, and they're across a couple of African nations. And we're talking about places that some places they have a light bulb. And so their use of power is so small and little. But how do you justify that scale of economy required to go and build a large energy project, millions and millions of dollars, or even to the billions at scale? How do you justify building that how excess energy supply if there's no demand? So the mining is coming in there as like this sort of like energy special forces, which is it's the first buyer of power. So it's this perfect marriage that mining offers. To produce power costs a lot of money in, producing a lot of energy out. And the mining is the opposite. It consumes a lot of energy in to make a lot of money coming out. So it's this perfect marriage that Bitcoin is an accelerant. Bitcoin is an accelerant to build out more power more cheaply. Oh, your wind farm is not connected to the grid. You've got this multi-million-dollar, billion-dollar project that cannot sell power. That's their business. And if mining can come along and plug in directly on site, it's a wireless connection to the financial market through Bitcoin. And all of the stuff that Nikola Tesla sort of discussed about wireless energy, it really delves in that subject, but from an economics standpoint. But that path that we go down to, we can now build a world where we can produce as much power as possible, which makes the costs in society cheaper. And I pose this to people as a question. I say, would you be happy with the pay rise or your bills coming down? And most people say their bills coming down, because that's the issue. There's so much focus on finance. I want to be paid more. Oh, but you've now got to work more to be paid more in a currency that's devaluing. So our energy is just being stolen. On the flip side, it's why do people want to earn more? It's because their bills keep taking it away. That's the our life. We're scraping the margin between trying to get paid more and the bills all taking it away. So what if we have a world, we've got this new monetary system that's trying to incentivize the production of as much power, yes, to make Bitcoin, but secondary to being able to sell it because they'll make more. So we create this world where there's an incentive to produce more power, which reduces costs in society, versus this monetary solution of the politics of let's move this rate around and charge this group in society slightly less tax. They're fiddling with the numbers at the highest layer, the financial layer, not realizing that we need to fix fundamental layers of, okay, we've got the climate topic and renewables and sustainability and the importance there, but it's destabilizing the energy markets to create higher prices and the costs to subsidize. Like in the UK, there was a wind farm. It's like half of its power is just put into the ground because the power can be made, but it can't be provided to society because the power isn't needed at that point. That discrepancy of when we need power and when the power is produced and when it's needed, you can fill that with batteries or this new economic battery of Bitcoin. So yeah, Bitcoin is a financial accelerant to make energy cheaper, which makes everything in society cheaper, and then the prices in Bitcoin start appearing from that. That's what I see happening over the next 50 years at least.
Okay, so I've heard like Jeff Booth talk about how Bitcoin is an energy buyer of last resort. Like it's unlimited. It's like unlimited hungry for power. But is there
that economic limit though?
Yeah, that's what I wanted to ask. Like, is it really an unlimited buyer? Is there always a profit margin where the Bitcoin miners will want to eat up all that extra power? Or no, not really. That's still dictated by supply, demand, economics, or whatever.
Supply and demand. Everything's in equilibrium, which is if I say the analogy, there's about 450 Bitcoin a day. It's a big cake. All the miners show up to the party. We're all going to get our slice. If twice as many miners show up to the party, that would assume that twice as much power is being consumed out there. What would happen is that 15 cent or 20 cent kilowatt rate would drop in half. If more miners try and access that same quantity of Bitcoin available to mine, we all just get paid less. But what that does is price the Bitcoin against the miners and the energy. So every time miners are plugging in, it's actually raising the value of Bitcoin. But yeah, from the buyer of last resort perspective, it's that you've always got this, or first and last resort, as a lot of people say, just that, stranded power, but also excess and wasted. But that mining sets a baseline. You know how, and then the way I analogize it is think of how the central banks, they set an interest rate. They set a group of people set the price of human time and energy. They determine and set what human energy is worth in terms of borrowing that, the interest rate. What Bitcoin swaps is that Bitcoin per kilowatt hour aspect. It's an energy rate. And in the peak of the bull market, it means if miners are earning 40 cent a kilowatt hour, what price would they sell it to? 40 cent. So what Bitcoin introduces is essentially an interest rate that is dynamic to how much energy is being produced from the miners and how much transactions and consumption on the financial side. That if there's loads and loads of economic activity in a raging bull market, energy starts getting more expensive. And in the bottom of the bear market, energy is really, really cheap. But what that suggests is there's less economic activity because we're in a bear market. So what we'll see is if energy is cheaper when there's less economic activity or under cold, dead, and then in a heated, in a period of time where there's so much economic activity that we're overstepping ourselves, the price of energy gets really expensive in Bitcoin. So Bitcoin sets this new dynamic interest rate as a global free market of Bitcoin per kilowatt that allows prices and goods and services and costs and society to have something that is decentralized and an instrument of an interest rate not set by a group, but globally by everyone. And then other stuff that Jeff Booth talks about is the aspect of, you got this 21 million units and everything else expanding. So everything's the natural free state of the economy is deflation. But it's weird, we only see deflation with technology. The cost to take a picture 100 plus years ago versus the thousands of pictures you can take today, the cost in technology always declines. And naturally, we should see that with everything. I always use the analogy of my grandmother's house as a key example on the sort of monetary inflation versus deflation side. Is my grandmother's house has only deteriorated for 40 years. Why is it worth 5 times as much? The pictures of the house in the 80s and stuff versus today, it's deteriorated. It's just got older and things are broken. Blah, blah, blah. Why is it worth multiples more? The village didn't really change much. The town didn't really grow. Yes, land maybe changed a bit, but it's the money, it's the units expanding, trying to buy goods and services that are scarce underneath, versus Bitcoin, which is the other way around. The units are scarce with Bitcoin, and the people trying to produce the Bitcoin are expanding that productivity of energy, technology, satellites and communication systems. All of the core functions of the 21st century society, Bitcoiners are just incentivized to build it. They're paid Bitcoin to go and build systems, stabilize energy grids, and preserve and protect and build that infrastructure of tomorrow, but get financially rewarded in a currency that's scarce. So yeah, there's a lot of societal changes to happen. I think one of the I'll stop there and then.
Yeah, so it creates a first and last buyer of energy, which incentivizes people to build out all of these energy production facilities to harness cheap stranded energy where they really had no incentive to go before. And around these communities of energy production, you can actually build real human communities who they can then sell the excess energy to when it's more profitable to sell it to the local grid that they kind of develop around them. And to your point about like harnessing the energy of gold from mining it from the earth in California attracted all these people there because they were able to produce energy from the natural stores, which created massive communities and culture, population growth and abundance for the people in those communities. So, okay, I get that. Michael Saylor, he talks about Bitcoin as digital energy.
It is. That thing about electricity being now indistinguishable from money is essentially that representation. The third one I'd add is the hash power, the fractional, the thing that the mining machines produce, which finds the next block in the chain on the digital side. That's the third commodity. So essentially these three commodities are connected through physics and maths. And then on my business side, it's creating a financial layer on top of that. So financial markets based on three energy commodities, which are all essentially in of the same thing. It's not to say you can go and spend your electricity in the shop, but if you have a house with your own solar battery and your electricity, you weren't there even. You've gone on holiday. You're a pensioner with your own energy and that system. The excess electricity of your solar battery, whilst you've gone camping with your family, the excess energy in your battery at your house is flowing into your digital wallet as money, and then you go and spend it. So we come into a future where money and electricity are essentially one of the same thing. But yeah, there's a lot of different keywords that both I think Saylor and I have very similar sort of talking points about just seeing Bitcoin as economic energy.
When you say it's the same thing as electricity, I get it. Electricity is consumed to create the Bitcoin. So it's like a digital tokenized representation of that electricity, which can also, I guess, be converted back to electricity if you wanted to buy electricity. But then
we're not in a world yet that you'll be able to just buy energy from miners on a grid scale. Yes. But one of the reasons I'm here in El Salvador is that I see this path that system doesn't have to be a massive grid. It could literally be two houses with their own energy systems if that's what they want, or a whole group of homes with their own little microgrid, or an entire city, or the Buckminster Fuller discussion of an entire planetary grid for electricity. One massive grid that interconnects everything, which would actually help reduce war in the theory that no one would really want to interrupt anyone else's access to power because it would affect their own. All those different scale of things start with, you could literally have two houses that trade money and energy indistinguishably. The analogy of, you've got a house, your own energy and mining and Bitcoin generated. You go on holiday, you don't need the energy, you want the money. And next door, they've got all the family over. They need more power. What price would they want to switch you off and pay you the exact same amount of Bitcoin maybe than what you would have consumed earning from the network? And so you've got this system that can you see that money and energy can just be traded indistinguishably? Where that goes from a technical level is to build an entire city with electricity priced in Bitcoin. And then we'll see how those sort of free market pricing in Bitcoin comes.
The electricity can either be consumed as power to power your life, or it can be, if you have a greater incentive to not do that at the time, it can be stored into Bitcoin, which is economic energy, which you can also take advantage of in the future.
Yeah, which is also repriced against that growing pool of energy of the entire network. It's electricity money. And what that does is, in the time of the Romans, they were paid salt. The salary comes from salarium, I believe. And if what is money is the thing that allows trade to happen in the most frictionless way. The bartering days, if you had some cattle and I had some corn, but if one of us wanted something from the other, but the other didn't want the other thing, we need something in the middle. So money is a sort of technology, a resource technology of optimized trade of goods and services and we're all sort of resource gathering people. But where it comes to the aspect of, I've completely forgotten my point. Please go back to your question. I'm
just trying to grasp my head around it. It's electricity. Yeah, it's truly electricity money generated by electricity.
From it, priced by it, and is able to be used to purchase energy in the future. Because the other bit to add to this, in terms of this future state that we're going to get to, is Bitcoin mining companies, same with all the AI stuff, they're realizing that the fundamental layer is energy. So yes, they're buying electricity today, but when these new AI data centers as well, for example, are going into gigawatts, thousands of megawatts, which is thousands of kilowatts, so it's millions of kilowatts. That scale, they're realizing the energy companies are in our way almost. I say that very lightly, but the point is that they want to now produce their own energy. And they're going to do the same thing. They're going to have an economic value that they can sell it to everyone else, and an economic value they can consume it themselves. And that's a benchmark in the energy side. But also add that Bitcoin has a benchmark on the financial side as well. There's a lot of investors that hold Bitcoin. It's outperformed everything. And their benchmark is they're looking for investments that outperform Bitcoin. And there's only one key Bitcoin-specific investment that outperforms Bitcoin at a scale, and that's the mining. That you can spend $110,000 to buy it, or grow it yourself. Be the farmer instead of buying it from the market, which is convert it from energy. So what you get is this whole stack of people that can acquire the money at different levels. And initially that goes, oh, that's not fair. And it's like, well, no. If the person that's acquiring Bitcoin at $60,000 a coin is building out energy systems in our society that can sell the power, reduce electrical rates, stabilize renewables, lower prices for end consumers, I think they should be paid more versus I bought some Bitcoin, I put it in a wallet, and I sat on my hands thinking of this future. So what Bitcoin does as a system is get rid of that sort of monopolized ossification, which is we're a big company, we just want to sustain what we've got and keep growing, and that's the state that we're in now. We've got these too big to fail. massive, inefficient companies and systems and corporations that just leech from society. Zombie companies, they just feed on the dollars of debt that they can access, and they don't actually add any economic value to society. To say that we need an economic system that's a bit more like nature, if that tree can't survive, it dies, it falls. It's painful. But the same with 2008, we're just bleeding from that period of time where the financialization of real estate broke everything. A house is to be consumed. 2 houses, that second one's an investment. And so all these sort of pieces come back to, well, let's all park our money in something that's scarce and preserves value, but helps pay and fund for the build out of systems that lower costs and stabilize the industries of the world. And yeah, if we come into a world where you have to remain efficient and effective and productive to society to be paid that lower rate. If you're a bad performing Bitcoin miner, you don't get paid, period. And so it sort of introduces Mother Nature back into economics, the physical world having this connection to the digital world through Bitcoin, as we've got this form of money that I refer to as digital Mother Nature. The network doesn't care whether I plug in machines or not. But if I do it effectively and productively secure the network, I'm paid and rewarded in greater returns than just buying Bitcoin. And that incentive is why people mine versus buy as well. If you spend $110,000 on a Bitcoin today, or would you spend $110,000 on computers that could potentially produce, say, 1.3 Bitcoin, 1.4 over a 4 to 6 year lifespan of machines that they eventually break, but you want them to produce a higher return in Bitcoin, and that's the incentive to mine. You get it at a lower price. You're growing the tomatoes instead of buying them. Yeah.
So does this incentivize, Jake, kind of homes to have their own energy production systems, like you mentioned the solar panels, because now you just have this buyer of first and last resort. So it's not just the electricity you can earn by selling it to the local grid, but in times of excess, there's also Bitcoin, Satoshis you can earn to a wallet, which you can obviously spend in the economy.
Yeah. And the key aspect of this is I get emails if I mention things about the larger scale ideas is Bitcoin citadels, or here in El Salvador, I don't think it's like in development or in the path to yet, but they want to do a Bitcoin city. So there's all these new emerging ideas which descends down to the local level of we've lived in a world where they want to surveil and constrain and steal from the pension system. It's underfunded. It's essentially the pension system is a Ponzi because it's underfunded. The money that goes in barely just pays out what people can sustain. But I bring it back to the whole energy versus finance side. Would you be happier with what you're paid, whether it's an income or a fixed income because you're retired and you're just earning from your portfolio? Would you be happier with cheaper costs? So it's not just getting into mining to make money, literally, to make it and to earn it, but it's also, well, hey, now you've got a system at home that creates you heat, which is one of our biggest needs. We need to heat water and stay warm. You live in Canada, I'm sure gets very, very, very cold. So if you had a heating system, every time you turn it on, you've got money flowing to your wallet. That's a weird paradox. So my energy bill is paying me. So it's not just the electricity and the money and this computer in the middle, but it's where those systems feed into, well, now you can put these computers in a greenhouse and increase crop yields. You can have fish with crops on top. So the fish are secreting into the water and feeding the plants, and the plants feed the fish. You add heat to that as well, and the fish grow quicker. You stabilize the crops more. So you've got this energy money system integrating into agriculture, yes, finance, philosophy. It's exploding into every subject area. But that main thing for the person just wants to, it's optionality. You want to go and live in a city of noise and chaos and a big grid and surveillance. But there are people out there that want to go as far away from society as well. But it's all optionality. But if you now have the option to have a system of solar battery, you speak to anyone exclude the mining part. You just say, I've got a solar battery. They're not paying an energy bill, or they pay such a small bill. So it's that aspect of, you can sort of think, I can see the value of Bitcoin. It's volatile. I need cash flow, and I'm retiring, and But if you've got a clarity that you can cut a lot of your serious costs out of society, out of your life, it's all about that margin you've got between whatever you're earning, salary or income from your portfolio, and what's taking it all away. Helping the grandkids do all weird and wonderful things. That's the sort of stuff we want to spend our money on. In that analogy, that your kids, that you want to hand them as much time, you want to give them as much time and energy as you have. So if we've got systems that help strip away those costs, it just gives you more. But the struggle is the technical side, that a lot of it needs to be plug and play. You click a button, and you click buy. So that's where I see my business side being specifically important, which is all that stuff that I referred to about these fractional shares of miners. There's several different reasons for it. You got to buy the machines in bulk. You buy one of those computers, it's $10,000 or maybe $8,000 to $10,000. You buy hundreds of them, you're getting them half price. So that yield, that income will double. Mm-hmm. So how individuals can get into mining is impossible. It's really difficult. It's technical, and I love it. I love all the technical and financial side. And so I want to sort of create a system, the efficiency of capital markets. You buy shares of a company, and they're internally doing all the technical side. So that system of hosted mining, fractional shares, buy the machines in bulk. And whilst that computer's sat there, it's being traded, owned, lent, all the different sort of financial products, market services they're doing with Bitcoin as an asset. The lending side, locking it in contracts, locking it in a second layer to earn fees. But on the other side of that, it's the opportunity to all the tax incentives of mining. And it's just across the board, needs to be as plug and play. But the most important part is that final bit. What do you do with the machine when it's 3 years old, it barely makes any profit, and the only value is to send it off to Africa to help build grids, or onto oil and gas to mitigate the warming effects of methane? They have to burn the gas on site because they can't sell it. So the only thing that you can do is plug in a computer and wirelessly sell the energy. And there are people that are mining on methane, using the Bitcoin, the economic value, and buying even more credits. And so there's carbon negative hash rate as well, and all these sorts of things being developed, and a product that I've got in development as well. But the aspect of these old machines, they're going to get stripped down into the heating systems of the world. Why? The analogy I use is there's 100 million of the latest iPhone, but there is billions and billions of old iPhones. So the future of this mining network is not just going to be the latest efficient, shiniest object like Jack Dorsey's latest mining machine. And all of the different aspects that all the different aspects of, we're incentivized to make better chips, more power. Those are the two incentives for Bitcoin. Better chips, more power. And on the back end of that, you've got these old computers where their value is not to make Bitcoin, which they do still, but it's to make heat. And so and Canada's going to be absolutely ripe for this, which is you can have heating systems that it's like a module of computers. Think of it like a small shipping container. And that will create enough heat to heat hundreds, if not thousands of homes around it through district heating. So that will be the way to do it, because you can sort of look backwards and say, oh, everyone's got their own energy systems in each house, which if everyone's got gas boilers, it's repairs and replacement to each house individually, so there's more cost. If there was one single module for a village, as an example, they've got this scale of economy where they can reduce costs, have heat whenever they need it. But you can, and this is what's going to be discussed on the Hashpower Academy, is I'm going to call it like Bitcoin businesses and the case studies behind it. So for example, I got an email from a guy in Indonesia who wants to build a sauna, a Japanese sauna. Now, his biggest cost is heating the water as well as staff. Same as a hotel. The funny thing about you go to a hotel is you're not paying the energy bill. So you have this sort of energy expression. You've got the lights on, TV going, an hour in the shower. You don't care what energy you use. On the back end, that's why the hotel prices are so high, because of staff mainly. But energy bill is that biggest cost item. So if they've got these computers that are keeping the water warm, you've got two revenue streams. You've got the Bitcoin you mine and your occupancy of customers from one energy bill. So that rule of efficiency can't go above 100%. Digitally, Bitcoin sort of breaches it. But what that does is, well, hang on, you've got this hotel that's now making more returns for the same occupancy as all the other competition. So what's going to happen? Do a video on a sauna heating the water with miners, showing how it's built, the economics, and a funny video, your feet up in the sauna. And then 100 other people, the business owners of a sauna, or 1,000, or however many, probably 1 million saunas in the world. What if they watch that video and go, hang on, I can make more money just heating the water with a heating system that pays because it's doing another process? Mm-hmm. Now take that to the electric car charging, or the farmers that are putting, in the Netherlands, they're putting the computers in the greenhouses with the tulips. So they're earning Bitcoin as a revenue stream, and the heat is growing the tulips in a quicker time. So you're just going to see this massive adoption from all the industries that require energy. And from my side, my job is to teach each business case, keep it as clear as concise from the entertainment side of enjoying the business or buying some tulips, maybe. That'd be the comical one. Or, in the sauna. Show the numbers, the economics, present it, and then that replication. And that's what's going to happen on the energy side of the network. And it's a serious opportunity that I would say I'm going to look for investors, because it's that sort of hardware side of things of how it turns from this computer that sits in a data center to strip down to components which go into as a heating system. That's a job in of itself. Finding the staff and the all these technical Bitcoin engineer types that want the work. Hey, would you like a job decentralizing the Bitcoin network out into homes and schools and pools and retirement homes? Even if they keep it running like an absolute sauna in the retirement home, that now you could reduce costs. And the same thing everywhere. Everything that we've discussed here is, yes, you're making more money, but it's reducing costs, and that just widens that margin. Whether you want to live out in the middle of nowhere by yourself, or you want to live in the city, or somewhere in between, or a community. It's let humans live however they want to. We now have a financial system that preserves what you put into it and gains value, Bitcoin, and all these other systems that are integrating into society, making things more efficient, cheaper. We all want to go and travel and explore, and that happens when we have a money that's allowing us to travel. You don't move without energy. So, yeah.
Absolutely fascinating. You can wirelessly sell the energy.
Yeah. You need a physical connection to the grid, but the biggest problem with all there's these massive queues of years and years and years for these energy projects to actually sell power. So they're just sat there dormant, or the developers buy up all the land and they don't do anything with it until they get permitting and connected to the grid. So it's a business that cannot sell, and the computers just come on site. One container is about 1 megawatt, and can wirelessly transmit that energy. And the rate of profitability for solar, for example, is a solar project can make their money back in 2 to 3 years with Bitcoin, which they could probably make all their money back, or even the cost of spending that millions to build the transmission lines could be funded from the mining. So you can almost see it like the mining side is building out a root system. So building out electrical grids is almost like the roots of the network, is the best way to see it. Yeah.
Well, Jake, thanks for your time. I know you got to get going. Really appreciate this. Had my mind blown several times in this conversation. This is what I wanted to dive into, was the energy aspect, which I'm really trying to wrap my head around. It's a rabbit hole. It's a rabbit hole, and it's really, like you said, the foundation, but it takes time to get down to the foundation, I guess, because we all start at that top financial layer. which is maybe downstream of the energy layer. And maybe that's the truth with our current financial system too. But it's a fascinating, deep topic. Where can people check you out and join the Hashpower community and see what you're up to?
Hashpower Academy.
Yeah.
So the wider name is the TerraHash ecosystem. That is all of the different components of a business, trying to develop a heating system, the fractional share products. The platform, TerraHash.finance, is the main business side of things. We're taking people in now into hosted mining. So there's this gap of get people into mining now. They want to get into mining. Literally people emailing in, they're learning about things. So the main educational area is the hashpower.academy. But the YouTube is probably the best place to start. And yeah, the future is developing an application. It's called Lightning, which is a second layer to people that are familiar or not. So if anyone has small amounts of these fractional shares of miners, they're going to have small payouts of Bitcoin. So it's also serving that 90% of the world that cannot afford a $5,000 to $10,000 computer. They need something fractional and smaller, because it's about distribution. If all of this comes to fruition, we don't want the whole system to just transfer all of that wealth up to the wealth class of the tiny percent. There is going to be some form of distribution, and the great thing about Bitcoin is it's got a very long tail of distribution. Yeah, education is always the first step. So, yeah.
Yeah, incredible. So Hashpower Academy on YouTube, or if you Google it, you can find everything you need.
Yep.
So
TerraHash.finance, which is the financialization of Hashpower, which is that invisible commodity in the middle that people don't see. Yeah.
Yeah. Okay. Well, maybe I can have you on again in the future and dive into that, because
Sure.
we didn't even scratch that one yet.
Yeah. Okay.
Thanks, man.
Really
great.
I want to learn more on the real estate side as well, is because the topic that we could delve into with the second video would be what happens to the real estate side of things in a Bitcoin world. That the majority of the wealth is all swollen into real estate, that the financial premium on property, and how that is going to get squeezed and go onto the Bitcoin side of things. So it's this, the price is going to collapse and all these things. But yeah, we'll delve into that in another video. It's really interesting.
Yeah. Then it's monetary premium versus utility value. Things I think self-correct for the long run. But yeah, would love to connect again. Jake, thanks again. Enjoy the beautiful weather there in El Salvador.
I will.
Enjoy the pupusas, and thank you again, man. I really appreciate this.
Thank you for the time as well.